Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's update our review on the gold market. Actually, guys, you could see that we should be happy with this performance. Everything goes with our plan as we suggested. So currently I do not see any reasons to change it. Gold really has nice upside potential with the grabber that we've got on the weekly chart. So just taking out at least of this top. Maybe not this week because we have the overbought around 33.70, but until the end of the week we for sure could see some further upward continuation here. Maybe with some minor breaks and pullbacks on intraday charts, but in general, potential looks good. So this is confirming by actually things that we see on other markets, on the dollar index, on euro currency, British pound, everywhere, Bitcoin, by the way, everywhere we have more significant upside target, and gold is not an exception. So here's we're also considering further upward action. Most remarkable thing today that probably could explain this performance stand on a combined view of the 10-year bonds and in general yields in the United States and performance of the dollar. So they are now stands in opposite action. So clearly the divergence between the behavior of the markets. If on the yields you could see tight standing in a range and even higher moving to the upside, the rising of the yields. Recently 30-year bonds have reached the 5% level, and this is absolutely doesn't agree with the performance on the dollar index. So you can see what's going on in dollar. My suggestion, since we do not have any significant geopolitical events, something of this kind for now, I think that it might be the rebalancing of the portfolios of the big funds. Why? Because the Moody's actually was the last, the last credit agency who kept previously the high rating of the AAA, and now big funds have the actually ability to treat the United States assets and the AAA, because at least the one credit agency keeps this rating. Now, no one keeps rating of the AAA. Moody's downgraded, S&P downgraded, Fitch downgraded. Now, they're all assets in the United States has the highest rating as to A+. So, and that could make those funds who have the obligation to invest only in the AAA assets, such as the pension funds, for example, they have to rebalance the portfolio. They have to sell United States assets and invest in somewhere else. Correspondingly, if you're selling United States assets, you do not need dollars, which makes pressure on the dollar, but at the same time you sell bonds, which increases the yield. So that, at least things that I see here, points on this potential moment. And now it depends on how strong this tendency might be, whether it will be really strong, long-lasting, because it will determine the upside potential and strength of the performance in all markets, because everything trades against the dollar, so it will make relation to the Bitcoin, to the gold, all Forex market, and so on. It's very interesting to see. So now returning back to the gold, if you take a look on the daily chart, here's market coming to the May line, so potentially bearish grabber also is possible here. But taking into consideration the fundamental background that we have, I wouldn't overestimate this potential risk. So here probably grabber either will not be formed, or it's a really big question whether it will work or not, because fundamental background and reasons for the current rally, they stand against this pattern, so they are not actually agrees with this, the logic of this pattern. But anyway, let's keep watching what will happen here, whether it will be formed. Next is a 4-hour time frame chart. Here's our hand shoulders performs really well. All our chance for position taking is working nice. So initially it was here with this big guarded steeple to buy on a daily chart. big butterfly here, as you remember, is ABCD that is completed at A point. Then we discussed this potential entry with the hand shoulders yesterday. We talked about entry with the minor butterfly. We'll show you a bit later. And all these three entries works nice. So market just keep going higher. Market is not at either but. It means that the next area that this could reach stands right there. So XOP at 33.70 and agrees with the 33.55 fib level. So approximately 33.55, 33.70 is the next destination point here. On the hourly chart, you could see that this setup works nice. Here is actually we could also use the butterfly. It completed the 1618 target, very similar to the euro. And I don't know whether any retracement happens or not, just because of the reason that I have explained. If funds will keep gradual replacement of United States assets in the portfolios, this tendency will go and go and go, and no retracement, even no reaction on some strong levels might happen. That's why, from the technical point of view, it is logical to suggest some reaction. Here is also, guys, you could see that the gap stands. That market is trying to close, by the way, for now, which is also bring some resistance to the current price level. Butterfly is completed. By technical rules, theoretically, we need to get some pullback, maybe at least minor pullback, 32.75, 32.50. So these two levels might be considered. But whether it will happen in reality or not, difficult to say. So from that standpoint of view, I wouldn't consider any shorts, and we could keep those longs that we already have. If retracement still will happen, our probably primary object here will be to consider additional chances for taking new longs position, rather than to consider any shorts or something of this kind, until the overall situation will start to change. That and towards our view on the gold.